whatever we are going to do is going to be based on market structure. Throughout the years that I've been looking into the Forex market, I've been looking into the trading industry as well, I came to realize that it's all about market structure. So there are things that I now take into consideration seriously more than anything else that I may know. Number one of it is market structure. The second is liquidity. And the third is entry. So based on these three things, I want to say that I have managed to draft a strategy or a method of trading that is based on the concept of the market structure, liquidity, and the entry. Now, I'm going to erase the chart for a little while. Ignore every annotation that is on this chart. You don't need it for now. Just going to hide the chart for now. And we're just going to look into a couple of things. We have heard of this ever since we knew the word Forex. And what is this? It's an uptrend. What makes it an uptrend? It's a series of higher highs and higher lows. Perfect. It's a series of higher highs and higher lows. Just that. And what we see from this is for every higher high, there is a higher low. For every higher low, there is a higher high. Now, this makes up a structure, an upward structure. Why an upward? Because yes, there are times when it's going down, but the overall tendency is of it going up. And that's fine. Now, there are a couple of things in the structure that I want us to pay attention to. Like these areas right here. What are these? These areas, I want to give them a name. I want to call them flip zones. As I said earlier, that these terms, they do not come directly from me. They come from those who came before me, those I've heard speaking, and those that I also learned from until I was able to draft my own idea or my own concept of how I'm doing things personally, at a personal level. Disclaimer. So these are flip zones, right? And I see market breakup, retest this, breakout and retest this, breakout and retest it. And what I have learned throughout the course is that whenever, if market can still break the previous structure, this is what I call a structural high. A structural high. Yeah. There is a structural high, there is a swing high. This is a structural high. We'll speak about the swing high in later terms. If ever market can still break out of a structural high, it means that trend is still continuing. We're still going forward. So we see it right here. Breakout, come back. Even though it's coming back, we saw it break out of this structural high. We saw it breaking out of this. So we know that we are still going forward, or we are still going upward. When it broke out here again, we are certain, we are positive that we can still go up. If it breaks right here, we are positive that we can still go up. The reason why is because above every high, there is liquidity. So price always follows liquidity. Definition of terms, liquidity simply means money, which I said I was not going to do. So price keeps following the highs, breaks out as it continues with that trend. And the same applies for a downtrend. You would see something like this. Now within these flip zones, structural lows. So for each low that is broken, it's hope that price is still in a downtrend. For each low that is broken, we still know that we are in a downtrend, which is pretty cool. But even though it sounds this simple, or it looks this simple, and sounds this simple as well, it does not actually feel this simple when it is happening. What do I mean? Let's assume, for example, it pushes up, comes back down. It does not necessarily come down with a straight line like this, but rather it will push up, then come down with some form of retracement. I'm going to try to make it look neat by erasing this and these two lines right here. So what do we have? We have a structural high right here, which was broken, and we see price coming back. And sometimes these flips, they will not look as neat as coming right straight through to that point of high, then it just follows up. Because if it was that beautiful, we wouldn't have been in quest of consistency as we are. It will just look as simple as it'll just be as simple as just waiting for it to test the structural high, then we just buy and we target the previous high, which is not necessarily like that most of the times. Why? Because aside from market price moving following liquidity, market price is also looking to hunt some stops, which is also another way of grabbing liquidity. So everything that we are going to talk about is going to be based on the concept of market structure. It's going to be based on a trending market. Are we going up? Are we going down? If we are going up, we are going to look at some specific zones in the market structure that we will be buying from. If we are going down, we are going to be looking at some specific zones in the market structure that we are going to be selling from. And I'm going to try, I'm not promising, but I'm going to try to always make sure that this whole course ends as simple as it started. I'll try to speak in the simplest terms possible. Perfect. So let's look into things. I'm going to bring a chart, or before I bring a chart, I also want to show another type of a trend that is not a downtrend, that is not an uptrend, but it is rather a sideway. We have it market doing structural lows are not properly defined. They keep ranging in the same area. We cannot determine whether we are going up or we are going down, but rather we are in the same zone of support and resistance, where price is being supported from the low and resisted to the highs. And it's another form of market structure. Well, do we trade in this structure? The answer is not yes. The answer is not no. The answer is it depends. If our conditions align, because the idea of taking a trade simply means there is a set of questions that I'm asking myself, and if I am able to answer that set of questions, then I'm in profit. But if I take a loss, it means I may have answered those questions, but I answered them wrongly. Perfect. So let's look into the chart and just look into a proper market structure, like a real time price market structure. Then we'll define some events on the chart. I'm going to look at this. In fact, let me go to a 4-hour of this chart right here so that I focus on this trend right here. First thing I want to do is take this to a line chart like this. When I take it to a line chart, I'm going to see a series of highs and lows. Like, for example, I have this high, I have this low, I have this high. So expectations, I'm expecting a low, but I got a lower low. So as I said, if lows are still breaking, it means I still have hope. If this low had broken, it was hope for me that the market is still going to go down, but it didn't. Rather, it broke the high. So if highs are starting to break, it means I'm starting to anticipate that market price is starting to take me high. We have a high right here, broken. So my anticipation is that market is going to take me high. For each time that there was a certain high that was broken, for every time that a high was broken, I see it right here, broken. I see it right here, broken. I see it right here, broken. For each time that the structure was broken, I judge that, or I see that is hope that we are still in an uptrend. Why? Because structure breaks upwards. If it broke downwards like it did right here, It was breaking downwards all along, but for the first time I saw that structure failed to break downwards, which is right here. When it failed to break this downward, and it created a low that is higher than the previous low, and it confirmed that by breaking upwards, it was an indication to me that this might be the end or the finale of this lower structure. Now, these that I'm marking right here are what I call the structural highs. And as we can see, it's as good as the illustration that I gave in the beginning. High, or the flip zones that I was talking about. As you can see, we see it going all the way up, coming back to those levels, then trade all the way up. Break it, coming back to a certain level, then trade all the way up. If I turn it back to candles, which I'm gonna do just now, I see a very similar concept. Flip zone. Right there we see market price coming back to it, go all the way up, coming back to it, go all the way up. But can we agree that I could just create a strategy based on just waiting for price to come back to a flip zone, then I buy? Yes, I could agree with that. But that is if I have sufficient or enough account, enough patience, strong emotions, strong sentiments to be able to endure all this loss. So there should be a question that I'm asking. Why did price actually come here before it go all the way up? And whatever answer that we are going to bring for this question should be based on the concept of market structure. Everything that we do is based on market structure. I'm going to avoid using controversial terms like QML, QMO, or the blocks and all that stuff. I'm going to avoid as much as possible. I'm going to try to keep this as simple as possible, because the simpler it is, the easier it is to follow, to understand. Yeah. And the idea is not to become the best trader. The idea is just to take a trade consistently, same asset, same model, day by day, and you make money and you get away from there. That's my own idea of how I look into things. I would look into this sell, not a sell model actually, but a downward market structure. I'll pick it up from here, either way. The reason why I'm taking from the candle ups, not from the wicks, is because if I had converted this to line chart, it would give me exactly right here, not on the wicks. So I see it right here, market structure, break until a certain structural low, come back, forming a low right here, a low right here being broken, all the way until when it created another low right here, another high, a low, let me mark it, another low right here, I always misconcept this, come back right here, break. As long as this structure, as long as this market keeps breaking lows like it does right here, when it broke this low right here, I built hopes that it was still going down. But when it failed, when it struck through that low and created a low that is higher than the previous low, to me now, it's now sounding different. It's now something else. What makes it something else is the fact that what I'm expecting, what I'm waiting for, what I'm anticipating is no longer happening. So sometimes you trade not because you are the best trader or because you know quite a lot, but because what you were expecting happened. So it happened when you were there, right time, right price, right pattern, and you are in. Sometimes it's about being where you are supposed to be and expecting something, and that something actually happening. I'm not talking about hoping for things to happen. I'm talking about expecting based on your model, based on your ideas, based on your own analysis, not just expectations that are built from hopes and dreams. No, nothing like that. So this is structure, structural lows, structural highs. I'll do a quick summary of what I just said. A trend, which is the first thing. An upward trend is a series of structural highs, structural higher highs and structural higher lows, a series of higher highs and higher lows, as we see right here. Nice. Now, flip zone is a point where a breaking structure becomes a zone where market price comes back to, then goes all the way up again. The similar concept of support, resistance, breakout and retest, breakout and retest, breakout and retest. But I said I'm gonna avoid those terms as much as I possibly can. So for this video, that is it. We'll see you in the next video.